Welcome back to Curious Commerce. The topic Cash Flow Statement, Part 5. On this session, we will discuss about the practical examples of operating activities, methods of operating activity, and the specific method of operating activity that is direct method. If I look at a company's cash flow statement and see only one section, I will look at operating activities because this section tell me whether the business is truly alive or not. Now, let us understand the examples of operating activity clearly. We already learned operating activities are related to day-to-day business operations. Now, let us see the most common practical examples. Cash received from customers. This is the most common operating inflow. For example, a shop sells goods, customer pay rupees 20,000 cash. That is cash received from customers. A coaching center collects fees from students of rupees 10,000. That is cash inflow from operating activity. This income from core business activity. So it is shown under operating activities. Money received from customers is the lifeblood of business. Cash paid to suppliers. To sell goods, you must first buy the goods, right? For example, a shop owner pays rupees 50,000 to wholesaler. Or the one more example, a factory pays raw material supplier. This is cash going out for day-to-day activities of the business. So it is called operating outflow. Without paying suppliers, business cannot run. Third one is payment of wages and salaries. Employees are part of daily operations. For example, paying teacher salary in school, paying staff salary in office, paying wages to the workers of factory. These payments are necessary for running the business every day. So, they are clearly operating activities. If salary is not paid, operations will stop. Fourth one is the payment of operating expenses. Operating expenses are regularly expenses needed to run business. For example, rent, electricity bill, water bill, internet charges, telephone bill, office expenses, advertising expenses. All these are paid for daily functioning of the business. So, they come under operating activities. So remember, money from customers, that is operating inflow. Money paid to suppliers, that is operating outflow. Salary and wages, operating outflows. Daily expenses are the operating outflows. If it happens daily in business, it belongs to operating activities. Dear learners, now we will study the cash flow from operation and activities in two methods, as direct method and indirect method. Now we will discuss one by one. Imagine seeing exactly how much cash comes in and exactly how much cash went out without any confusions. That is the power of the direct method of cash flow statement. Now let us understand its meaning simply. Direct method is a way of preparing cash flow statement where we show the actual cash received and actual cash paid. That means cash collected from customers, cash paid to the suppliers, cash paid for salary, and cash paid for rent. Everything is shown directly in cash terms. That is why it is called the direct method. And direct method shows the actual cash receipts and the payments. This is the biggest feature of the direct method. Under direct method, we clearly show the cash inflows and cash outflows. Cash inflows include cash received from customers, cash received from fees, cash received as commission. Cash outflow includes cash paid to suppliers, cash paid for salary, cash paid for rent, and cash paid for electricity. For example, if business receives rupees 1 lakh from customers and pays rupees 60,000 for expenses, the statement directly shows these two figures. There is no adjustments, no confusions. Dear learners, find this method very easy because it is practical, it matches real life, it looked like a cash book summary, and anyone can understand inflow and outflow easily. Even a shopkeeper with no accounting knowledge can understand direct method. That's how simple it is. But less commonly used method. Even though it is easy, direct method is less commonly used in practice because companies already prepare profit based statements. Because indirect method is easier from accounting records. We discuss later. Accounting standards often encourage indirect methods. So remember clearly, direct method shows actual cash receipts and payments. Direct method is simple and easy to understand, but it is less commonly used in practice. Direct method shows cash as it is, clear, clean, and practical. Thank you for watching. Follow our WhatsApp channel, Curious Commerce Financial Management Hub, for daily finance learning. Please like, share, and subscribe to Curious Commerce. The topic cash flow management will be continued in part 6.